Hey my homies, how's it going? Hope you guys all had a good week and that it's going good for you this week so far. I thought I'd start this video by patting myself on the back just a little bit based on my last video. Some of the predictions I made that seemed to be kind of looking the way that I was hoping they would look. Starting on the euro dollar, if you remember, contrary to popular opinion and also fundamentals, which are pointing to a much stronger dollar than the euro right now, a lot of people thought the euro dollar would be dropping, and it very well may. But I was actually feeling bullish for the week more than bearish, and I gave you my analysis last time based on swing structure and also some of the swings, the lows and highs and the support and resistance that had not been taken out. This trend line here I've now turned into a dotted one because the trend line was broken to the upside. This trend line I had drawn in on my last video, and I gave all the reasons for why I thought there was a good likeliness that it would be broken to the upside, and it has been broken to the upside. It took a few days, and this new week we are above that. There's still a lot of speed bumps along the way that would need to be passed through for continued confirmation to the upside, and I'm kind of doubtful based on fundamentals more than anything. If we were looking at the market solely on technical analysis, then we would be looking at whatever structure it is we look at. But when you throw fundamentals at that and world conditions like the situation in Egypt or oil prices or what have you, there's so much more that could influence and affect the market. Not to mention the market makers who also have a say in which way currencies go. Another pair that I commented on was the pound yen, and when I made my last video, price was right here. Let me zoom in a little bit. And I gave my reasons why I thought the pound yen was making a turn to the upside as far as the major trend goes. This was the swing high that some people were looking at, but I was looking at this swing high because this was the last significant swing high. We had this huge dip and a huge return forming a V coming off of this one. So as soon as this candle right here on the daily time frame took out the highs of this previous swing, my bias was starting to turn. I would not wait for this swing because this was the last significant one. And if the trend were really to continue to the downside, we should not have had this huge rally here coming back up into this area. And then a few days later, when this candle here breached the high of this one, that was the sign for me to start turning my attention to longs. So a day after I made my video, I think it was a day after or 2 days after, we had this big candle here. It smashed through the 200 EMA, and then I said that I was looking for a retrace, which we had. Now the retrace were these two candles here, these two daily candles. If you notice, there's confluence between the 200 EMA and the 133 handle. Price did not come exactly back to them, but we had this little tiny candle here, which was almost an inside bar, which would have been a good enough signal to take, possibly dropping down to the 4 hour. Draw a line there so we know which one it is. Possibly dropping down to the 4 hour to look for a better candlestick formation or area to enter. Also, the 4 hour trend line was being honored almost to the T right there. So there you have it. That little analysis of mine did go as I was anticipating. We also discussed the Aussie dollar in the last video and the anticipation that this support had been broken to the upside. When the video was made, we were on this daily candle here, and I anticipated that if we saw a good bounce off of this support turn resistance or resistance turn support level at the 100 handle, it would be a good place to enter long off of the break of a candlestick formation coming off of this area. And sure enough, we so far have had one, and it looks like there is some potential for continued move to the upside here. We will see. I've got to draw attention to the dollar Swiss franc, which I discussed in the last video. I had drawn in a Gartley pattern, and I'll draw it in again right now to show you what kind of a move we got off of this bearish Gartley pattern. My goodness. Okay, so there's the pattern, and I'll even draw a fib in there to further accentuate the levels of entry and the confirmation that we got off of the 61.8, which came so very close to the corner there of the Gartley, which is a good enough place to enter. We have an inside bar on the daily candle, and bam, we have a very strong drop for about 200 and 40 pips. Wow, that was a good trade to have taken, and guess what? I did not take that because I was not at my computer when that happened. Another pair discussed in my last video was the Euro Swiss franc, and I had drawn a fib like so. And based on swing analysis, based on the major trend, I had said that the 61.8 was a level I would be looking for a candle formation to go short, and that's exactly what we got right up in this area. With the break to the downside, we would have had a little over 100 pips by now. We had a very similar situation on the pound Swiss franc with fibs and Gartley's giving us a confirmation to go short, as well as the 200 EMA. And look, before I even draw the Gartley in there, look at how that 200 EMA acted as support to the T. Now let me go ahead and draw the Gartley in. So there's the Gartley on the pound Swissy on the daily time frame, and what a beautiful confirmation there with the 200 EMA to go short. Look at that confluence. My goodness, what a setup to take this one short and ride it for a nice little run to the downside. Well, I guess I spent a lot of time patting myself on the back in this video, but I did want to show you that there is power in technical analysis, and once you learn how to read the trend is your friend, and when you can learn how to read reversals, my goodness, you will be golden. All right, have a good week, and thank you for watching.